Hello, traders. It's 8 a.m. Chicago time on Monday, the 4th of May, 2020. Thanks for joining me again this morning. Well, morning my time for episode number 1747. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment across the board with the DAX lagging 378 points, 3.48% taking a hit. The DAX, of course, was closed on Friday, so it's making up for the drop in Friday and the drop in today's session, followed by the Euro stocks down 97 points or 3.36%. Crude is off 41 cents or 2.07%. And then the Russell's off 18 points and 1.44%. The leader this morning is gold. Gold's above the 1700 figure yet again at 1709.30, up $8 and 1 cent or 0.48%. This morning, the overall view of the market is that the European shares and U.S. shares have fallen as the Trump administration is increasing tensions against China regarding the origin of the coronavirus and the refusal by China to share information about it. The Asian stock markets with China, Japan on holiday, Hong Kong shares dipped the most in 6 weeks. Crude slipped on worries that global oil glut may persist. The dollar rose against most major currencies. There's some data for this week, but in general, with the rhetoric coming out of the White House this weekend, we're looking at another trade war flaring up between China and the U.S. So again, news dominates. Pandemic slams global factories. Activity sinks to new lows. This week also we have a few key releases this evening, my time at basically midnight, half past midnight U.S. Eastern time. We have the RBA interest rate decision from Australia. Tomorrow we have balanced trade out of Canada and the United States at 8:30 Eastern with a whole bunch of numbers. The calendar is very busy this week. Wednesday, balanced trade out of Australia with a bunch of numbers out of the Eurozone. We also have non-farm payrolls on Friday, so don't forget about that. So we get ADP on Wednesday at 8:15 Eastern. Thursday brings the Bank of England interest rate decision, among other things, non-farm productivity and so on from the U.S. We're going to pay attention to initial claims. It's supposed to back off this week. And then in the evening on Thursday night, Eastern U.S. time at 7:01 p.m. We get GfK consumer confidence out of Great Britain. Friday starts off with balance of trade, and then out of Germany, and then non-farm payrolls at 8:30 Eastern U.S. time. It's non-farm payrolls is a key number, as you already know, probably. In either case, the scheduled events this week are quite busy, and don't forget there's also a slew of earnings coming out. So that's where that stands. In reviewing in our review segment here on Friday, the main scenario that I talked about, and I talked about this last week early on, I'd called for the very strong potential of testing up to 79.20 last week and potentially pushing to 50. And then I was looking for the market to roll over in Thursday's trader bite. And then on Friday, we had a gap down open. You can see there it's marked at 28.51.75 at the time of the trader bite. And the primary scenario is a likely push to around 2860 in the S&Ps before we roll over and we push down into 2820 before the bounce into the close. So the primary scenario is we open wherever we were at the time, push to 28.60, roll over, push down to 28.20 and bounce up into the close. We expect to leave a gap zone open. Remember that box there stands for a gap zone that's not closed, and 2882 becomes a fairly significant resistance area, a fairly significant expected resistance area or probable resistance area, because I don't know what's gonna happen. So again, open 2860, 2820, bounce back up. Let's take a look at what happened. Here's what happened. This is the 4-tick Renko. We open up in this open auction. Look at that open auction out of range. That is just a beautiful two-way open auction. This is what an open auction looks like. It just goes completely sideways. Where do we go? We go to 28.57.75. Remember, I was looking for 28.60 right up here. 28.57.75 comes back down, holds the mid on a retest, and then pushes that low. So we get this impulse down. This is an impulse down, 10 and a quarter. Pulls back to mid. There's a little setup there, and then it continues lower, takes out that higher low and pushes lower. Let me adjust the scale here a little bit. There we go. And then puts in a lower low. That is, the target is the prior low. It's 28.4275, 42.50. Takes out the low and then pushes back above the mid, and now we're looking quite balanced. We finally get another impulse down right here. We get another impulse down, and then it pulls back to where? It pulls back to the mid area right there, the blue line. Comes back and takes out the prior low, and then again it does it again. It pushes through mid, goes sideways, looks choppy, looks tough, and then we finally get it spilling over into the 28.20, which was right here. 28.20 was right here, and that was the low end target. It ended up pushing to 16 first, pulling back shallow, and then continuing down to 12, and then bouncing back up to 28.27 on the close, 28.30, but 28.27 on the close. We end up with a somewhat of a double distribution profile here, in what looks like a long liquidation profile with a very distinct LVN zone between 28.31 and 28.38. This is an important area to note. I have a stock zone here at 36 to market, and that's the overall play. What is something that you remark about this chart? Can you? I'll give you a few seconds to answer that. What is the remarkable thing about this chart yet again? Can anybody point it out? Let's see if you're awake and paying attention. What is remarkable about this chart and the action? Remember, we had a gap and go situation. We gapped down and we were not able to fill in above. We're not able to fill in above. So we are rejecting the prior auction, and this auction became initiative right here. It became initiative. It's moving away from accepted value and is pushing away and discovering new prices to the downside. It became initiative, right? That's what that impulse is. And then it consolidated at the bottom of the range. So on a gap down, you have a market that became initiative, then it balanced down here. So pay attention to this 28.20 area that was the initial target from Friday morning's plan. And then where do we finish? Yep, many of you have got it. I filled in the time. Takes forever. The lag is so huge on this thing. It's terrible. It can't interact. Look at this delta. The delta remained positive the whole day. The whole day, even with this impulse down, big price movement. And what do we get? We get a move in delta from 7,000 to about negative 500, 469, something like that. And in this whole period down here, we have buy, 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 right? The lifting is more aggressive than the selling. The lifting is more aggressive than the selling. And then we put in this low for the week, basically, which is a week low. There's no excess here. There's no excess here. So we have a delta that is moving up on price having fallen. Remember, delta is 0 at the open, at this green dotted line. It's 0 at the open. Price is way below, yet delta is way above 0. Okay, so there's some sort of accumulation, there's some lifting on the way down, and we may see that play out over the next few days. Many of you have been following along. I've pointed this out before, and you saw how that played out in the next few sessions. So somebody is lifting the market on the way down. Remember, if you're buying a lot, the most efficient way to get filled is on a drop. As the market is dropping, you buy, you buy, you buy, you buy, buy on the way down. You're getting a good average. And this is not for a day trade, for a swing is what I'm guessing. We don't know what the participants' plans are, of course. But in either case, it shows that somebody was either covering shorts by buying, same thing, as initiating a long by buying. We don't care which one of those that is. We can't find out. We don't know, but we know that somebody's interested in these prices and is propping them up or executing a long order. So that's what we gain from Friday. Here's our bookmap, ctbookmap.pro. The overall session is this noisy kind of gap down. Remember, part of what the market was part of the reason the market was expected to go lower, is also, Warren Buffett's comments yesterday. He had a big interview about Berkshire Hathaway and what they've done. He said he's just dumped every penny of airline stocks he owns, and he didn't paint a very bright picture, and the market listens to Warren Buffett. So you would expect Warren Buffett to step in and buy up a bunch of stuff, as that's his way of investing, is to run into a burning building and buy up the furniture. And he's saying we're backing off, and the Fed acted too quickly, too strongly. We're backing off, and the market's kind of got the jitters. That, with what I covered already, the combination with the blame game with China and wanting to hold them accountable through tariffs and a trade war, that's got the market on edge. Okay, so here's what we've got. We've got kind of a noisy session overnight in terms of order flow. Above us, we have 28.15. That's been sitting here a while. You can see there's a wall. There's a wall of, somebody's turned on an algo right here. You can see it right there. It's black, and then it starts to color in. This is probably one algo kicking in here. There's nothing going on at 6:07, 6:08 in the morning, my time. And so it's kind of weird, but we see 28.15 above. The market is battling with 2800, the century figure right here. You can see we built a lot of volume in this region since the reopen, and below us is little specks at 27.85, 27.80. Those are option strike prices for the S&P futures. And overall, I'm finding the overnight session quite noisy. It's trading below the prior day's range, so we're opening in a gap down. So gap rules. I am expecting it to be responsive this morning, somewhat up till 28.22. So if we look at 28.22 up here, the prior point of control, we're not seeing much liquidity. So it's a little odd this morning how the market is positioned in terms of standing bids or standing offers. It's not really, the market's not taking a strong stance this morning, is the way it looks to me. So that's that. In terms of, I want to pull this up for a minute because I think it's important to always keep an eye on the big picture. Remember last week I said this uh, area between 29.18 half, 29.23, and then above that 29.49, and also 29.39 was a big low volume node. That whole area, that cluster, presents a big a big uh, area of confluence for many for multiple time frames. And I talked last week about the high probability that we would turn and roll over, and that's why I brought it up Wednesday and Thursday. Um, and what we've accomplished here is we pushed into the 62%, but we've also pushed into the MC point of control for this entire region. This goes back to, I think, December 24th, 2018 is where this composite started. This is a big area that we were in last week, this 29.20 or so, about 100 points above, and we've pulled back. This is exactly what was expected. And now the market's kind of rolling over and is exploring lower prices, and it can push. And remember when I said that you can look this up in the prior trader bites, they're all on YouTube available to you. You, the expected turn is to 2820, 2800, and then I was looking for 2749 and 2720, with 2717 and a quarter being the prior low. I don't expect it to go that low, but I'm looking for around 2780 or so as a potential support area as it pulls back. So this is the composite chart. Each bar here represents 1 day of pit session only. And you can see that we've made these nice little waves on the way up. We've pushed up, pulled back, pushed up, pulled back, pushed up, pulled back. And you can see with every push, the market is getting weaker on the higher pushes. You can see those measured pushes, those zigzags across multiple days. You could see that the market is kind of weakening as it's pushing higher, but overall the delta is very strong, right? There's some accumulation. These are bargain basement prices for somebody because they keep buying it up. So that's where we stand. Now, let's move on to what's expected for today. So today we have a very likely very busy day this morning with a gap. Uh, we're looking for, we're right in the 2800 here with the point of control 27.9950 for the overnight session. Actually, we didn't look at the overnight session. Let me flip back to that for a minute. Here's the overnight session. It opens at a gap down, explores down to the low 71, and then it rolls right back up and comes back to test the prior day's low area, that weak low. Remember, weak lows tend to break the weak low, and then it holds steady. And where we are currently is we are above mid, above VWAP for the session, right at the overnight point of control in the 2800 figure. And so my expectation for this morning, for the open at least, just to balance things out, is we are likely to open and chop in the 2800, likely to be reserved at the beginning. And then I'm looking for responsive buying to push the overnight high for the overnight stat, consolidate here on the low, push up to 2822, and then that's where we're likely to see some resistance. It may squeeze up to 2830, but then it is likely to kind of consolidate near the low end of Friday. That's scenario one. I'm expecting it to struggle right here, right here, right there. And what a coincidence. Those are the stock zones, and that's why those stock zones exist. So that's where that stands. Scenario two, I'm looking for an open auction that breaks higher, is unable to get into the prior day's range, find some resistance, impulses down once it's exhausted the buy side, and then pushes into the 88, 2788, 2779 on its way to the overnight low, and then it gets exhausted in the 63 or so area, consolidates, and then pushes back up on the close. That is very ambitious for scenario two. In terms of range, the market really has to spill its guts to go from 28.13 in this environment to 27.56 or so. Not very likely, but if it does fail to fill the gap, or it does fail to push towards 22, we're looking to become sellers, and we're looking to squeeze the short side, especially if the overnight stat is not done, to squeeze the short side and aim for that 71 below. That's what I'm looking for the two main scenarios. I've gone over my time, as I've done a lot lately because of the market action. Good luck. And again, I want to remind you, hey, if you have not looked at edgeclear.com yet, please do. This is a brokerage team. My team and I launched a month ago, exactly a month and a couple of days ago, on April 2nd. We avoided April 1st, April Fool's Day. We launched it, and the goal here is to get your support because we're building some technology, and the entire brokerage is going to be built on the idea that every trader should be treated like a member, like a prop trader. And so technology is being built, and a lot of features are being built, and they can't be done without your support. So since you're trading somewhere, please give EdgeClear a shot. Our pricing cannot be beat in terms of the micros as well as the electronic. We're competitive on the S&P, Nasdaq, crude, whatever. We still have competitive pricing. The brokers take good care of you. It's an experienced group of brokers who are award winning. And we've worked together now for anywhere between 5 to 7 years, 5 to 8 years. Good luck. Please check us out. Take care.